Have you ever thought about what would happen in the event of a quick, huge rainstorm? Don't do it slowly over weeks or months. Do it all at once in the billions of dollars. That's because, as Canary Capital CEO 𝗙𝗏𝗃𝗀 said, that's exactly what could happen when spot XRP goods come out. During the first 24 hours, he thinks that $3 billion could come into XRP. That's not just a guess. That comes from someone who has launched ETF goods before. Using Jake Claver's XRP multiplication theory as a guide, the numbers quickly become ridiculous. This is not a good place to put your money. Before I show you how these numbers could instantly change the value of XRP, let me make sure you understand something. This possible setup isn't just a wild guess. It is a structure. It's a perfect storm of math, cash, and lack of resources. At that exact moment, people in the market become millionaires. By the way, if you really want to be ready for this moment, read the pinned comment below for the XRP Millionaire Plan. Video highlights, infographics, and the whole paper are all included. Here is everything an XRP owner needs to know about how this next wave could change things. You should watch it as soon as this one stops. We'll just make it easier because this is so crazy. 𝗙𝗏𝗃𝗀, who is in charge of exchange-traded funds, ETFs, has said that he thinks a spot XRP ETF will get somewhere between $2 and $3 billion in trading volume at launch. He said that conservatism was like the first day of Bitcoin futures, when more than $1 billion changed hands. He said it would take some time. Before, there wasn't as much of a market for cryptocurrencies. When we use Jake Claver's multiplier method and start with his guess of $3 billion, the math gets really interesting. Jake Claver showed that it is a big mistake to look at the total amount of XRP. A lot of people talk about the number 100 billion XRP, but the real question is how much of it can actually be bought. Why? Because it matters when the money starts coming in. It's possible to get multipliers by spending $3 billion on coins that can't be bought yet. Based on Claver's estimates, there are currently less than 2 billion XRP available on platforms. The retail industry may hold more private funds, which is your real supply of liquids. But at first, the ETF funds would focus on the easily available and tradable XRP. Please allow me to explain why. If $3 billion comes in but only 2 billion XRP are available, there is a funding bottleneck that will set off a multiplier. For every dollar that is chased after, the value of those coins goes up by a huge amount. Claver's math shows that by that point, the increase should be about 50 times. That makes sense in some ways. This is how changes to supply and demand work when there isn't a lot of cash on hand. But this is where the interesting part starts. If those $3 billion come in and start buying XRP, your $2 billion won't last long. In just one day, the exchange stock will drop by half. A lot of money is sitting where you are. The ratio has also been doubled. This is the most realistic way to get a 100-fold rise in value because of that one-day event. It's now possible to picture this $300 billion rise in market value. 3 billion out of 100. When you split that number by the total number of XRP in circulation, you get about $150 per XRP. Sure, of course, $150. And that's just based on the same model that Ethereum and Bitcoin experts used when their ETFs first came out. Before you say, that's impossible, think about what has happened in the past. When Bitcoin spot ETFs first came out in early 2024, experts thought there would be a huge supply shock. It was more like 4 times than 50 times for Bitcoin because big institutional buyers stepped in to meet demand. That's why Bitcoin's value didn't just go through the roof. Let me explain. XRP is different from this. Bitcoin is the market leader because it has high liquidity, big exchange balances, and institutional investors who are ready to sell. XRP doesn't agree. The exchange supply of XRP is very small compared to its total amount. This is because of escrow or long-term believers who aren't using their holdings. That's what's making things unfair. Think of it like a seesaw. There is a heavy side to Bitcoin. A lot of stock, famous items, and sales. Good for XRP. There aren't many ETFs that can drain it. It has a small amount of liquid assets, and its supporters are strong. When that institutional money comes in, the price of XRP could be under a lot of pressure. Life will be different even if we don't hit $150. As an example, let's use the 50 times ratio as it is safe. $5 billion times $1 billion. Its market value is $150 billion, which is about $75 in XRP. This number could go up a lot faster if $5 billion comes in the first month, which MC Clerk thinks is very likely to happen. Don't worry, this isn't all talk. This is where math and shortage meet. When given the same information, MC Clerk, Jake Claver, and Zach Rector all came to the same conclusion. This makes sense. The amount of XRP available is getting very low. Take a moment to think about this. In terms of volume, CME XRP futures were the asset that got to $1 billion the fastest. We already know that these goods aren't being made by people who trade on a small scale, which shows that institutional investors want them. You can see banks, family offices, private wealth groups, and funds. They all want to be seen by everyone. As soon as the spot ETF door opens, the money that has been quietly waiting for regulatory clarity can finally move. It won't drip either when it moves, it will be hit by a freight train. Let's say that all of this happens at the same time that the Flare network opens up XRP yield possibilities. At the same time that ETFs are coming in, XRP is being used to lend, borrow, stake, and make fake safe assets. I'm not just talking about market pressure, that's the law of usefulness. At the same time, value is being locked and made. The special thing about XRP, in case you don't know about it, unlike meme coins that are based on hype or speculative layer coins, XRP was made to be used for payment. Its main target is the financial industry, not just DeFi, but the economy as a whole. When utility demand is combined with institutional deposits, it's a very rare event. This is the reason why many private companies and very wealthy people are quietly stockpiling right now. In other words, they are ready for the liquidity event. After that, there will be no more chances for you to join for less money. You can see work, but it's not clear when it will be finished. The registration of CME futures ETFs and the formation of custody companies both send the same message. Like Bitcoin ETF, or maybe even more so, XRP is about to run out of time. Even more interesting is this very thing. Ripple is easy for institutions to add to their processes.